from 16% year-on-year growth last year to about 12% year-on-year growth this year, and it's going to halve to about 8% year-on-year growth going into 2024. So not looking very, very rosy. And a large part of that is actually the credit cycle. Loans are actually slowing down. If you look across Southeast Asia for the first half, except for Malaysia, most other countries actually saw loans contracting. Part of that is high interest rates, so that's actually discouraging a lot of businesses and consumers from borrowing, but also the fact that a lot of the reopening tailwinds rather, are starting to go away, and China slowing is also not adding to the overall confidence in the market. But one of the good things is that net interest margins, this is the overall margins the banks get after their cost of funds, that's actually holding up quite well, partly because, overall policy rates, what the central banks are guiding, are quite high. So that should keep margins high, but that's going to come at the expense of credit growth. Now, one of the big positives, though, that we saw was that non-performing loans actually are doing quite well. They're not growing very much. And in fact, the experience coming out of COVID actually has been quite positive. A lot of the moratorium loans, companies and consumers actually paying those back. So in terms of asset quality across Southeast Asia, it's actually holding up quite well. And what our analysts are saying across the Southeast Asian market is that this should continue going into next year as well, and NPLs should be fairly benign. And another positive is the fact that provisions for these banks and capital ratios for these banks are at some of the highest levels in history, especially going into a crisis. So there is a lot of cushioning for these banks if things start to go things start to go wrong. Now, that's why we have downgraded our outlook for the ASEAN banks from a positive recommendation to a neutral recommendation. What this means is we have to be a little bit more selective on which countries and which banks we want to invest in. And in terms of the two relatively positive markets that we like are Thailand and Indonesia. And largely this is because we are expecting the governments to start spending a lot more in the second half this year, which should help with credit growth. And also it should lower the risk of NPLs even further. So amongst that, one of the top picks is Bangkok Bank. You'll see that on the screen there. And this is one of the top picks because we think from a consumer point of view in Thailand, as the Thai government starts spending, this is one of the key banks that will benefit from that. At the same time, we also like KTB. And in Indonesia, we like Bank Mandiri, again, one of the largest banks there, high quality balance sheet. And as Indonesian economy starts to gain some traction with government spending, this will be one of the first banks to benefit from that. We also like BBCA there as well. But across the rest of ASEAN, we do have a few other banks that we like. One of them is DBS, also CIMB in Malaysia, and Techcombank in Vietnam. Now, switching gears, we can't ignore the fact that oil prices have hit and gone past $90 a barrel after Russia and Saudi Arabia said they will extend their voluntary supply cuts. Now, if you take ASEAN, it's a mixed bag. You have some net oil exporters like Malaysia, and we also have some big oil importers like the Philippines. Now, to discuss this a little bit more, we have Anand Padmakanthan, who is a regional head of research, who's just published a very timely piece on this. And Anand, welcome to the show. And I want to ask Anand, how should we think about the winners and losers of oil prices hitting these sorts of levels currently in ASEAN?
Sure. Hi, good afternoon, Dylan. And thanks for inviting me on the show. Very happy to be here. As you mentioned, we did publish a report last week on the impact of oil price uptrend on specific ASEAN stocks and countries. So, at the macro level, very clearly, Malaysia as a net energy exporter is going to be a beneficiary. Now, there's a caveat to that in the sense that, a lot of the revenues or extra revenues earned by, higher energy exports revenues is going to be given back domestically due to the petrol subsidies, for which the bill will also be expanding. But net, we do expect Petronas to be quite a big beneficiary of this uptrend in Brent crude oil price. And as you mentioned, at the other end of the spectrum, the Philippines, which imports 100% of its oil and energy needs, is going to be quite badly impacted in terms of the current account and also in terms of inflation. So that's the big picture. The report we did actually focuses specifically on stock winners. Now I'm going to focus on the biggest winners or the most direct beneficiaries, and these are really the upstream exploration, production, and drilling companies that we have in ASEAN, and we have quite a few. I'll give you a few names. So in Malaysia, we have Hibiscus Petroleum, which is pure play in terms of upstream drilling. And they have a lot of concessions, and they would be directly exposed in terms of more revenues from higher oil prices. Another stock which is bigger cap is PTTEP in Thailand, also very well positioned as the only pure play oil and gas exploration and production company in the country. So very clear positive sensitivity to higher oil prices. Third stock, this is in Vietnam, so Petro Vietnam Drilling. So drilling services there should benefit from rising rig day rates. These are all buy-rated stocks for Maybank Research. In Singapore as well, we have a couple of picks, Dynamac, CSE Global, and also Citrium, which is non-rated for us. All these are oil and gas services companies, and they should benefit from rising demand from the industry as well.
Great, Anand. So we should really be thinking about the upstream, the service providers, and that's how we should be playing this theme, at least in the near term.
Yes, absolutely. I should mention that, it's not all winners. There's some losers potentially or headwinds. Aviation stocks in terms of higher jet fuel prices would be one that you may want to be a little bit cautious on in terms of margin impact if the uptrend continues.
Yes, so Singapore Airlines, for example, is one of them. Great, Anand. Thank you so much for joining the show.
Thank you.
Now, talking about big moves, it's not just oil that has, made some big moves. We actually have a big call from Erica Tay, who covers our macro for Maybank as well. Today, she downgraded China's GDP growth to 4.8% for 2023 from 5%, which was a forecast before, and 4.4% for 2024 from 4.6% before for 2024. Now she's saying that a new reality is setting in. So Erica, I just want to ask, when you're saying a new reality is setting in, what are you trying to tell us? What are your key reasons behind this downgrade?
Hi, Dylan. Yes, so the downgrade of GDP growth actually reflects two realities that are setting in. First is that economic activity in China is still worsening, but the pace of decline has moderated quite a bit. So in August, exports and imports dropped by 9% and 7% respectively, but this is a lot less severe than the double-digit drops that we saw in July. So this is a good sign that trade is on the mend. And also, we saw China's inflation returning to positive territory in August, despite fears of deflation taking hold. In August, inflation came in at 0.1% from negative 0.3% in July. So we see things gradually improving on both the price and the trade front. And now, more importantly, and this is where the second reality comes in, it is starting to dawn on the markets that China will be restrained in its measures to prop up the economy. So since late August, the government has taken a very modest steps to prop up real estate, the stock market, as well as private consumption. The government has loosened property restrictions, halved the stamp duty on stock trades, as well as a doubled income tax reliefs for families with young children. So all very modest moves. And so far, it is too early to tell how effective these moves will be, but it appears that the Chinese authorities are not in a hurry to roll out any massive stimulus soon, but rather they will continue to extend measured support that is aimed at preventing downside risks rather than fueling a burst of GDP growth. So that is the basis of our GDP downgrade. Yeah.
Got it, Erica. So basically, the market has been calling for much more bigger stimulus measures from China. But what you're saying is that in a way, China's hands are tied behind their back. They can't actually make big moves because that can create other externalities.
That's right. So the message, the bottom line is don't hold your breath for massive moves that will boost either real estate prices or GDP growth.
Right. So, I mean, I think that's going to have some implications for the ASEAN markets, especially for markets like Singapore, which has very large gearing to China's economy. Now, one of the things that I found quite interesting in your report is you talk about ASEAN emerging as one of China's top export markets. How should we think about that? And amongst the ASEAN countries, which ones do you think will benefit the most?
Yes, Tilan. So we noted that indeed ASEAN has overtaken the US in the first 8 months of this year as China's top export market, after overtaking the EU last year to be the second most important export market. Even though ASEAN's final consumption demand is indeed growing, but we suspect more of this is because of US-China tensions. So basically, we observe that more China-based manufacturers are shifting part of their supply chain to countries such as Vietnam, Thailand, and Malaysia. So these countries will be set to benefit from some sort of a manufacturing boom from the reconfiguration of regional supply chains.
Thanks, Erica. For those of you who are interested learning more about the reconfiguration of supply chains and stuff like that, please refer back to our newsletter last week, where we did talk about a green manufacturing revolution in Southeast Asia as well. Thanks, Erica. Thanks for joining us today.
Yeah.
Now, this is a stock I get a lot of very polarized comments on, which is Sea Limited. I do get quite a few clients saying, what do we do with this stock? Should we give up on this stock? Kelvin's actually published a very interesting piece on this today. The stock's down about 1/3 since the results, so in just 1 month. But he sees a glimmer of hope, particularly with the TikTok e-commerce potential ban in Indonesia. This is following what the US is trying to do, as well as what India is trying to do. He thinks that this will help defend their market share in Indonesia, where their e-commerce platform is the biggest. And at the same time, he's looking at the overall holistic strategy of the company, where he thinks that gaming revenue GMV is bottomed out, so that's going to start to grow, and overall revenues are set to grow as well going into next year. So I think there is potential that a lot of the bad news is now in the price, and is sticking to his buy recommendation. And if you look at the target price, it's almost a doubling of the stock from current levels. So that's something to keep an eye on. And if you want more information, please do deep dive into Kelvin's research report that came out today. Now, going into the technicals, we've got two ideas from Nick. He's got a buy on Civmec. Remember, Civmec is one of our high conviction opportunity plus stocks that Eric has been writing quite a lot on. He thinks that some of the slowdown that the stock has had recently. He's actually giving it a new pathway to a bullish recovery. So this is probably a good time to enter the stock, but he's not as optimistic on SATS. He's had a sell on this. It hasn't worked very well so far, but he's doubling down and saying, this is not the time to go back into this stock. He thinks there will be more selling pressure to come, and he's keeping his sell recommendation on this stock. So keep an eye out on that, particularly going into the next couple of months. Now, in terms of announcements, we have a few big numbers that are coming out over the next few days. We've got the unemployment rate of Singapore coming out on the 14th. We've got the Nodex numbers coming out on the 15th, and the CPI, the inflation numbers, coming out on the 22nd. And we'll also get an idea of overall bank lending and how the Singaporean banks are faring, and give us some of the first sort of clues to the second half. And that's coming out on the 29th of September. In terms of events, we've got ComfortDelGro's management presenting today. We've got the CEO and the deputy CEO joining to talk about what their growth plans are for the next few years, and that's happening at the Maybank building. So if you haven't RSVP'd, please RSVP to your salesperson. The event starts at 6 p.m. today. And also we have, just because we've been talking a lot about banks, we have the Digital Banking and FinTech Day happening tomorrow. This is a virtual event. We will have ACS Digital in Malaysia, one of the new crop of digital bank licensees there. We have K-Bank in Thailand, Stashaway, which is a digital wealth management platform, as well, and the CEOs and the top C-suite management will be speaking on their strategies, as well as we'll have an expert from Ernst & Young who will give an overview on their expectations on how digital banking will grow over the next few years in Southeast Asia. So please do speak to your salesperson if you want to join any of these calls and register. Unfortunately, that's all the time we have today for our show. So thank you very much for joining us again. Please scan this QR code for your feedback and have a profitable trading week. And we will see you next week, and we'll know who would have won the Singapore Formula One by that time.
Recording stopped.
We go for lunch?